Bloomberg is now on your dashboard. With Apple CarPlay and Android Auto, it gives you access to every Bloomberg podcast, live audio feeds from Bloomberg Radio, print stories from Bloomberg News in audio form, and the latest headlines at the click of a button with Bloomberg News Now. It's free with the latest version of the Bloomberg Business app. That's the Bloomberg Business app. Get it on your phone in the Apple App Store or on Google Play. Just download the app, connect your phone to your car, and get started. And it's all presented by our sponsor, Interactive Brokers.
Welcome to the Bloomberg Markets Podcast. I'm Paul Sweeney, alongside my co-host, Matt Miller.
Every business day, we bring you interviews from CEOs, market pros, and Bloomberg experts, along with essential market-moving news.
Find the Bloomberg Markets Podcast on Apple Podcasts or wherever you listen to podcasts and at Bloomberg.com/podcast.
All right, Herman Chan's in here, and he covers the regional banks for Bloomberg Intelligence. I don't know why he's in here. I don't know why we got to talk to this guy. But Herman, what's happening with the regional banks? Because I feel like a huge shoe is about to drop in terms of, I don't know, commercial real estate loans, just higher rates, credit card stuff. Give us a sense of what's happening with the regional banks, and is the FDIC concerned?
Right. So the sentiment for regional banks has been poor since March and April after the failures of SVB and Signature, First Republic, and shares haven't really rebounded since that time. There's been concerns on...
Which you told us was probably going to happen.
Right.
They were not going to rebound because this is a long-term earnings
We're facing a longer-term earning issue from margins because of higher funding costs and higher interest rates. Banks aren't lending that much because they're focused on building capital because of tougher capital rules. And then you mentioned commercial real estate and office CRE, a potential shoe to drop there potentially next year with higher loan losses. So the sentiment has been poor, but also you've seen a bid recently over the past couple of weeks as inflation pressures seem to be easing. So the thought of interest rate cuts are positive for banks. And actually, the regionals have rebounded about 15% since their lows earlier in October.
I look at M&T Bank as my proxy. I know there's an ETF out there that is probably much better, but I just like looking at M&T. It's a quality regional bank, up 14% off of that low back in late October.
That's right. So there is a bit of an inverse relationship with longer-term treasury yields and regional bank stocks. So that's something to look out for. In terms of the FDIC, the organization is expected to vote on a special assessment to replenish their deposit insurance fund, which was hit from the bank failures earlier in the year. So the largest banks in the United States are set to have a hit in the fourth quarter in terms of expenses.
Like JP Morgan's got to pay for the regional banks?
Yeah.
And by the way, was it an industry-wide problem, or were the managers at SVB Group just asleep at the wheel?
SVB was a bit asleep at the wheel. I would concede that.
They were passed out cold, right? Blood alcohol content, like 4.
Not really focused on interest rate risk at that.
Well, why would you focus on interest rate risk as the head of a bank, right? Who cares about that? And now Jamie Dimon has to pay the tab.
Right.
He must be very unhappy about that.
The surviving banks are paying for the sins of the guys that had the failed institutions. So it is how the industry works, for better or for worse.
No, really? You think SVB Group would bail out JP Morgan?
Well, M&T, like Paul said, is bailing out SVB as well. So everybody has to pay their fair share.
Full disclosure, Herman Chan loves M&T.
Well, he used to work there.
Yeah.
Yes. In investor relations?
That's right.
And you're a proud mid-market kind of regional bank.
I mean, I bank at the Huntington in Columbus, Ohio.
Who doesn't?
Huge fan. Look, because as a local, I've grown up there. Generations of my family have banked there. So, the
Miller name carries some weight there.
Well, or the benefit is when times are tough, they work with us. Whereas a bigger bank would say, "We'll see you later, sayonara," right?
Sure.
Huntington will stick with us and work with us because that's just how more localized banks work.
So, but there are 4,000 of these regional community banks out there. If I put my M&A hat on there, I feel like that's an industry ripe for consolidation.
Right.
Is that Is that in fact the case? And if so, what would be the catalyst?
Yeah, the regionals have talked about M&A being a factor later on, but not quite over the next 1 year time horizon. You have to remember that higher interest rates are a factor, and when banks do M&A, they have to mark to market the target's balance sheet. So, and marking to market means that they have to set the current value on both the loans and assets and deposits, and that can create a hole in the acquirer's balance sheet. So they're waiting for maybe rates to come down a bit so they don't have this tangible book value hits. The second factor is that regulation is still up in the air. The Biden administration has been a bit reticent for bank M&A despite some of the pressures earlier in the year. That seems to be easing, but there's still a lot of questions on that front.
All right, so the commercial real estate, how big of an issue is that for the banks? And when will we see it, I guess?
By the way, you know where the phrase waiting for the other shoe to drop comes from.
No, but you told me.
It's because back in the days when New York City was filled with these tenements, the walls and the ceilings and floors were so thin that you could hear when somebody would come home from work and take off his shoes.
Okay.
So you knew when one dropped, you were about to hear the next shoe drop.
Okay, very good.
Oh, you learn something new every day.
I think it's great that it's tied to real estate, right?
Right.
Because the next shoe to drop is also tied to real estate.
Yeah, that's true. In terms of commercial real estate, it creates more headline risk, in my view, than actual potential losses for at least the regional banks that I cover. We're talking about 2 to 4 or 5% of their total loan portfolio is tied to office commercial real estate.
Who owns that stuff then?
It could be smaller regionals. It could be securitized CMBS.
Because I'm thinking about
insurance.
I'm going to go back to my lipstick building on 3rd Avenue and 54th Street here in Manhattan.
Right.
At some point, that thing's going to reprice, and it's going to reprice at a big discount,
Right.
and the equity is going to come out of that thing. And whoever's got the mortgage against that
Right.
is going to have to do something.
Yeah, you're going to have to take a big hit.
I just wonder who owns those kinds of commercial real estate mortgages.
My brother, by the way, works in the lipstick building.
Such a cool building.
Yeah.
I think it's awesome.
Yeah.
I think
So
Bernie
hopefully they
Madoff
do
used to
okay.
be there as well.
Oh, yeah?
Yeah. But
Bernie Madoff was there.
Yeah. So it is a headline issue, but I do think it's going to be manageable. But you will inevitably see losses for the regional banks, and they are already booking reserves against potential losses expected over the next few years.
All right. So, but if I'm looking at M&T Bank, so when do I say the earnings risk is behind this industry? I'm looking at the next year's numbers. It's not then. They're still going down.
Right.
I guess in 2025 is when you expect earnings to rebound for this sector?
Yeah, I think we've written a note actually today on net interest margins potentially stabilizing. And for most of the banks that I covered, that's will happen by the first quarter of next year if interest rates even stay where they are today. So that's positive. You're not getting any benefit from loan growth, though, so that's an issue. There's sticker shock in terms of how interest rates are for both commercial borrowers and retail customers as well. So that's going to be a factor for the foreseeable future. But in terms of net interest margins, that stabilization will help reduce some of the pressures on NII, net interest income, for the regionals.
All right, man. Herman Chan, you're the man. You cover all the regional banks for Bloomberg Intelligence. We appreciate getting a few minutes of your time coming here in our Bloomberg Interactive Brokers studio here. Still a little bit of headwinds there for the regional banks. But again, I'm looking at some of these earnings estimates out there. They start turning really noticeably positive in terms of growth rates in 2025 for some of the regional banks. So who knows? That could be an interesting area.
You're listening to The Tape. Catch our live program, Bloomberg Markets, weekdays at 10 a.m. Eastern on Bloomberg.com, the iHeartRadio app, and the Bloomberg Business app, or listen on demand wherever you get your podcasts.
All right, let's do a little C-suite conversation here. Let's talk healthcare, biotech, cancer. Helen Sabzevari joins us. She is the CEO of Precigen. Precigen is a publicly traded company. It lists on NASDAQ. PGEN is the symbol for to type into your Bloomberg terminal. Helen, thanks so much for joining us here.
Talk
to us about Precigen. What do you guys do? Where is your focus right now?
So we have been focusing on a cell and gene therapy and really bringing it to the next level. I think what we know that this is going to be the cutting edge for the next decades, and it is working for treatments limited in a hematological oncology setting.
Okay, so we're talking cancer here.
Yes,
okay.
Cancer setting. And however, the problems are basically the access to the patient, the cost that it's relevant, $500,000 tag prices for the treatments, and you can only get it once. Precigen is bringing it to the next level. What we are doing is manufacturing overnight at the fraction of the cost, done at the hospital, so you don't need centralized manufacturing.
So you make it at the hospital?
At the hospital.
Okay.
And accessible to the patient, and they can receive repeated doses because the cost is so much lower and it can be produced overnight. And it's precise to the patient because we use their own cells to modify them overnight and infuse them back to the patient. So this is why we say we are bringing the therapy to the next level.
How much better are my chances now of surviving if I get cancer today, say, versus 10 or 20 years ago?
Definitely, the field has been coming along in various immunological therapies, and now with the cell and gene therapy. So the chances of survival is much higher. The percentages still is not up where we need to be. When we look at our therapies, we are in 20-30% response rates. We need to do much better than that. And this is one of the aspects that, for instance, even the cell and gene therapy right now in the field of cancer, for the liquid cancers, they do well in some of them, but they have not had any effects on solid tumors. And this is where we come in as well, because now our technology can address both sides overnight with the much lower price tag for the patient and specific to the patient cancer. And I think that's very important because then you avoid treatments that you know it will not work.
I'm going to ask an ignorant question. So pretend I'm a complete moron. Are you there?
You're not.
Why haven't we cured this disease yet? I mean, we've been throwing hundreds of millions. I mean, our boss throws billions of dollars at this disease for decades. Yeah. And there are a lot of people out there, probably not medical professionals, but people who think, you know what, this disease is simply too profitable to the healthcare industry to actually cure.
I think the issues with the cancer is multifaceted, and the mechanism of escape of your own cells from your own army, which is your immune cells, is very complex. And the reason that over the years, you see, we have moved the bar from chemo to now immunological immunotherapies, and now to your own cells recognizing it. And this is exactly what we do. We are bringing out your own cells and train your army back, and we reinfuse it back to you, so now they can recognize the enemy from within, which is your tumor cells. And I think that's where the difference is. And what we have to do is obviously make this much more accessible to the patient very rapidly, because the patients don't have enough time, and the current cell and gene therapies will not address that. And also treat a much larger patient population, which is the Precigen platform with the Ultra CAR T does that overnight at the hospital.
So where are you in the development of your company, Precigen? I mean, are you guys, do you have your product or your pharmaceutical in the marketplace yet?
So what we have is our Ultra CAR is already in the clinical trials across the United States, and we have been reporting not only the safety but efficacy. For instance, in AML patients that they don't have more than a few months to live. And we have shown complete and partial responses in these patients in ovarian cancer as well as triple-negative breast cancers that we are moving. But also, Precigen is not just the Ultra CAR company. We have other gene therapies, modalities that addresses the HPV cancers. And actually, we are really excited because the 2024 is going to be a breakout for Precigen, as we are bringing the first drug for a recurrent respiratory papillomatosis, which are the benign tumors in the trachea and throat of the patients. And the FDA has given us the accelerated approval, and we are moving toward the commercialization by 2024, which now changes the paradigm for our patients and for our investors.
I mean, I'm just looking at your stock. It's down 33% this year. I have no idea why. It's got a market cap of $250 million.
It traded at $65 a share in 2015, which was admittedly years before you came into the company, but it's trading for $1 now.
It was a different company, and I think what we have done is since 2020 that I have become the CEO, we have changed the company and focused mainly on health. And in 3 years, we have moved the platform from a discovery to the scaling up and to the commercial. And we just received not only the breakthrough designations from FDA, but accelerated approval. And the company by next year is moving toward the first commercialization of the drug in the HPV field, which, as you can imagine, it's a huge field in cancer as well as in infectious diseases.
So are we ever going to get to a point where there will be treatments that will be better than chemo?
Oh, absolutely. We are moving in that direction. And the cell and gene therapy is exactly that. What we are doing currently at Precigen is really taking your own cells, immune cells, and modifying them and returning them back to you. So the safety is much more favorable. The toxicity is much less, because it's not chemo that kills across. This is designed to only kill the tumor cells and nothing else. And I think this is why Precigen is bringing the field of cell and gene therapy to the next level.
Who else is doing this? Like, who else is doing kind of what you do?
There are a number of companies that they are doing the classical CAR-Ts, but this is exactly...
CAR is C-A-R-T.
Yes.
CAR-T.
CAR-T.
And what is that?
Chimeric antigen receptor T cells. These are modified T cells. However, the way it's done in a classical fashion with the centralized manufacturing, which takes almost between a month to 2 months. The cost of these CAR-Ts are close to $450,000 to $500,000. What we have done is do that in the completely differentiated way than everyone else. And the Precigen is the only company that has this technology currently. And we do that at the clean room of a hospital without expense.
All right, so all I know about biotech is it's a binary. It either works and the stock goes up through the roof, or it doesn't and it goes to zero. What's the milepost for your company for that?
So in the very near future, in 2024, we are moving our first gorilla adenovirus platform in an RRP patient, rare disease patient, which FDA has given us the BLA, and we will be commercializing this. So that would be the first, and that's why I think we have a great opportunity and very exciting year in 2024. And to your point, the stocks definitely has been under pressure. All stocks have been, including Precigen. However, we are confident that 2024, with the new drug that we are bringing forward, and already with the accelerated approval from FDA, we are going to bring value to our patients as well as to our
fascinating
investors.
Story as always. I mean, so many fronts on this fight against cancer. Helen Sabzevari, CEO, Precigen is the company. It is PGEN is the ticker, with some new techniques and new therapeutics.
CAR-T. We're learning something.
We're learning something.
And the adenovirus platform, which addresses both oncology in HPV cancers and infectious diseases.
You're listening to The Tape. Catch our live program, Bloomberg Markets, weekdays at 10 a.m. Eastern on Bloomberg Radio, the TuneIn app, Bloomberg.com, and the Bloomberg Business app. You can also listen live on Amazon Alexa from our flagship New York station. Just say, Alexa, play Bloomberg 1130.
Let's bring in our next guest, Brian Stelter, special correspondent for Vanity Fair. You know him from CNN. He was a longtime correspondent there at CNN. Producer of one of my favorite TV shows, which I just finished, The Morning Show. That's based upon his book. He's got a
Top of the Morning,
right. He's got a new book out. This guy's prolific. Network of Lies, the epic saga of Fox News, Donald Trump, and the battle for American democracy. Brian Stelter joins us. Hey, Brian, thanks so much for taking the time to join us here. Kind of, what did you learn in your reporting for your new book here? This is territory that you're familiar with.
I had to write it because the last time I wrote a book about Fox, it was mostly anonymously sourced. And you all know that's how it has to be sometimes. Some sources insist on confidentiality. They won't go on the record. But then 3 years later, when Dominion was suing Fox News and Dominion was able to obtain all of those emails and text messages from inside Fox, I felt like all of my anonymous sources were now speaking on the record. Of course, it wasn't their choice. They were forced onto the record through the legal process, through the document discovery process. But there were so many revealing messages, including emails with Rupert Murdoch, that I thought, hey, someone's got to turn this into a book.
So what's your take on where Fox News goes now? I mean, post Tucker Carlson, ahead of a new election season, they've got a new CEO. There's so many changes that have happened in the last, year, 6 months to a year. What happens to Fox?
That's right. We talked after Tucker Carlson was ousted on the air. Then Rupert Murdoch deciding to step aside. It actually takes effect this week. Yesterday at News Corp, tomorrow at Fox Corp, he becomes chairman emeritus. And he's really elevating his son Lachlan, making it even more clear that Lachlan is the future of these companies. What's the future of Fox? Well, in the book, I quoted an insider saying Lachlan just wants to minimize headaches and maximize profits. I think that's what we see in the Tucker Carlson firing. He wants to minimize those headaches, and then he wants to try to figure out how to make as much as he can out of these declining cable businesses while also investing in Tubi and in Fox Nation and other streaming ventures. Of course, Fox is one of these subscale media players. It's not nothing like Netflix or Disney. So I think, in the future, anything could happen. I think the most likely scenario is we're going to see another attempt to recombine News Corp and Fox Corp, but maybe not for another year or so.
So, Brian, what's in some of this? What are some of the new issues that you kind of unfounded or founded here in this new book?
Yeah. What I get at is Rupert and Lachlan Murdoch's role within this company and this network, Fox News, that is the dominant player within the Republican Party. And what I found is that the times when Rupert and Lachlan should have stepped in and been more involved, they weren't. They were laid back. They were kind of letting others do the dirty work. Remember in Succession when Lucas Matson says he's hiring a pain sponge? Well, I came to realize that's what the Murdochs really do in real life. No wonder this show was so heavily reliant on the Murdoch story. They have their own pain sponges, to clean up the messes. And so that I found was interesting when reading these emails and text messages, that they keep their, they have plausible deniability sometimes with some of these scandals and lawsuits. And of course, these lawsuits are ongoing. We know Dominion settled, but Smartmatic, another voting company, is suing Fox. There are a lot of shareholder lawsuits and other defamation lawsuits. It's really remarkable that here we are talking at the end of 2023, and there's still so much litigation about the last presidential election.
What do you think about, we've recently heard that Donald Trump was dead set against leaving the White House. And, more and more is coming to light, but it continues to shock me that he has such a strong hold on, a place like Fox or the U.S. Congress. How does he continue to have that kind of strength?
I think it has a lot to do with the rewriting of January 6th. And I discovered this as I read through all these emails and texts, that after January 6th, Rupert Murdoch said very clearly, we're going to make Trump a non-person. We are pivoting away from Trump. He was told by his number two that Sean Hannity is ready to lead the 75 million Trump voters away from Trump. So clearly there was an attempt to make Trump a non-person. But it didn't last. So why didn't it last? Why was Trump able to get back to center stage? Why was he replatformed? Well, I argue it's because people like Tucker Carlson rewrote the story of January 6th to say it wasn't an insurrection, it wasn't a riot, it was just a tourist visit gone bad, that it actually wasn't that big a deal, that, hey, maybe the feds were involved, maybe the government plants were in the crowd ginning up the protesters. Basically, by presenting a conspiracy theory version of January 6th, I think it helped to absolve Trump in the minds of his fans, to absolve Trump in the minds of Fox's viewers, and thus, now here we are, Trump's still the dominant figure in the primary.
Brian, what role do you expect Fox News to play in this upcoming presidential election vis-a-vis the former President Trump, who presumably is the Republican nominee?
Well, look, the first two GOP debates of the season both went to Fox. Now there's going to be a few more debates, but without Trump, they're becoming less and less important. Trump is in a little bit of a standoff with Fox. He thinks he's more powerful than Fox. They go back and forth because, they're like it's like, I don't know if it's a buddy comedy or it's a horror movie, but it's a situation where they're kind of both battling each other at all times. But at the end of the day, what matters most is that the audience comes home and Trump comes home. He will come home to Fox because they have the same interest. They want to see Democrats defeated. So even though there's lots of talk about Trump trashing Rupert Murdoch, complaining about Fox, I don't think that'll matter in a general election. I think what'll matter is that Fox still has a stranglehold on a giant piece of the right in the United States.
Does CNN want a piece of that? I mean, they did a town hall with Donald Trump. They've made some moves that media critics have questioned, as you know. What's CNN doing?
I think right now CNN is trying to report the truth as loudly and clearly as possible. And I think they've been excelling with coverage of the war between Israel and Hamas. I think there was, an effort last year, and I think an understandable effort by David Zaslav and others to try to figure out how to appeal to everybody, appeal to conservatives as well as liberals and moderates. But I think we have to make a distinction between conservatives and MAGA loyalists, okay? It's the same distinction Biden makes in his speeches between Republicans, who he's known for decades, versus MAGA Republicans who seem to want to burn it all down. You're not going to be able, in my view, to get through to Trump loyalists who have been told for almost a decade now that the real news is fake. So if that's the strategy of CNN, that wasn't going to work. But I don't think that was the strategy. I think the strategy was, and maybe to some extent still is, to try to show that it's real news coverage, not the fake news that Trump lied about. And, that's the problem for a lot of these brands, a lot of these media brands. They're up against a disinformation campaign. So I have a lot of sympathy for the CNNs and the NBCs of the world that are trying to get the word out that they're actually just doing their jobs, reporting what's in the world, but they're up against this hurricane of noise and lies from Donald Trump.
Brian, what's happened to Tucker Carlson? Do we know kind of how that has turned out yet? Because for a while it seemed like there were a lot of MAGA Republicans that were going to switch away from Fox and go to, I don't know what he's doing, but has he still got a big following?
He doesn't quite know what he's doing yet either, but he's making a lot of videos on the site formerly known as Twitter, and he's reportedly raising money and making ad deals so he can grow that into a real media company. I think he has big ambitions because he wants revenge against Fox. He wants to show Fox who's boss. But right now, his platform has diminished. He's not making as much of an impact. He's not as influential. Yes, he still has a fan base, but it goes to show once again that the machine is bigger than the parts. The parts are replaceable. Fox News is the platform that matters, not the individual hosts. And gosh, for whether you love it or hate it, that's a credit to Rupert Murdoch for making that investment almost 30 years ago.
Yep. And I always say what made the Fox network was Bart and Homer Simpson. So that's kind of when they finally turned the corner. Brian Stelter, thank you so much for joining us. Appreciate getting a few minutes of your time. Brian Stelter, he's a special correspondent for Vanity Fair, formerly a correspondent for CNN and producer of Apple TV's The Morning Show.
You're listening to The Tape. Catch our live program, Bloomberg Markets, weekdays at 10 a.m. Eastern on Bloomberg Radio, the TuneIn app, Bloomberg.com, and the Bloomberg Business app. You can also listen live on Amazon Alexa from our flagship New York station. Just say, Alexa, play Bloomberg 1130.
All right, let's switch gears here. Let's get to our next guest, Laura Martin. She's a managing director, senior media and internet analyst at Needham. She's based out in Los Angeles, right in the heart of Hollywood, does all that stuff out there. She joins us via Zoom. Hey, Laura, I want to start with Disney here. Bob Iger's been back now, I don't know, a couple of years, a year and a half, something like that. What do we know about where he wants to take this company?
I think on the part, we have two companies here now. One is Parks, and it's on a tear. Record high margins, really a big cash flow generator, and he's going to invest $60 billion in that business. So that business has proven its growth trajectory, and he's going to invest in driving that growth longer. Fine. I think what Nelson Peltz is arguing about, and I think the long-term media analysts are on this, is I don't think he's actually shown us that he can grow the now that streaming sort of hit maturity and it's still never made money. Can the content business grow, Paul? And if not, why is he keeping all these people? Like, it's okay if a business, he doesn't have a dividend. So it's okay if a business doesn't grow. If you cut your people and you raise your dividend, that's called a GARP stock. That's called a value stock. Okay. But right now he's investing like the content business is growth. And I think Wall Street is unclear that the content business is still a growth business.
All right. So, I mean, it's almost sacrilege to ask this question, but you could make the call here Like if I'm an investment banker, I'm a media M&A banker, boy, there's a lot of pieces here. Do I try to break this company up and see if I can get better value in the marketplace for the pieces?
You know, a lot of these CEOs don't want to relinquish actual control of an asset because that's how they judge their power, is how many employees they have reporting to them. I do like the idea, Paul, of spinning off 10% of Parks because I think Parks really is a growth engine. I think you get a much higher valuation for Parks if somebody could buy it alone, away from the content assets where there are a lot more questions. And in creating that security, but still keeping it for tax consolidation and keeping control over it, you would get a higher value for the aggregate Disney shareholder.
What's going to happen to ESPN?
Good question.
Well, lots of speculation here. I do, Bob Iger on the call did say he's looking for people or companies that can enhance his distribution, give him more content rights, and or give him more marketing gravitas. So he doesn't really need money. Yeah, well, I like the NFL as an idea a lot, or the NBA, because the NBA rights, NFL has got locked up for a decade, so he doesn't really need the NFL right now. But I do like the NBA, which is coming up, and they're saying that the cost of the NBA might go up by $4 billion. And Bob Iger has promised us an extra $2 billion of cash flow next year. Well, if the NBA rights go up by $4 billion and he pays that, he's going to wipe out that promise and make his free cash flow even worse. So I like that idea as a strategy. Look, NBA will give you a little less cash than you want, but we'll give you 10% of ESPN and we'll sign a 10-year deal. That's actually a better deal for the NBA, if you ask me.
Interesting. Hey, so Laura, I want to get your opinion on something. When you and I were coming up in the business, the media moguls were Ted Turner, Sumner Redstone, Rupert Murdoch. Is David Zaslav the new media mogul for the kids out there today coming up in the business? Is he it?
Dude, did you read the New York Times story on him this morning?
I did.
Ripping on Jeff Zucker for having tears in his eyes.
Yes.
After Zucker was like, I needed you as a friend.
Yep.
I mean, that guy sounds pretty harsh. Do you want a friend like that?
I don't know. So I'm asking.
Do you want
Laura.
a boss like that?
Exactly.
Do you want an employee like that? Would you want to be in the same room as a person like that? I mean, I don't know if it's true. I'm just reading the Times story, but it's rough.
So, Laura, tell us about Zaslav.
So I'm going to answer your question, though. I think the new media mogul is Jeff Bezos, who now no longer runs Amazon. The guy who started Amazon Prime is a media mogul. I think it is possible it is one of the few streaming services that survives because it's got Amazon e-commerce.
Yeah, right.
And Amazon Music and Amazon and MGM's library. I think the new definition of media mogul, it's too small. David Zaslav is too small. The company he runs is too small.
But isn't Amazon kind of an also ran to Apple? Because Amazon Music, what? I use Apple Music. Amazon Prime, yes, I have it, but Apple TV is much sexier, right? Why isn't Apple the big media mogul?
Oh, well, I guess from a media mogul point of view, I mean somebody who runs around Hollywood.
Okay, that's a good point. Sorry. I guess it's not Tim Cook.
Mogul doesn't just mean you run a business. There's literally, when I do cover Apple. When I think of them, I think of these, brainiac guys designing beautiful pieces of hardware where services is sort of the add-on to keep their hardware selling. None of them feel like moguls to me. Literally the opposite of moguls.
Yep.
Like down-to-earth engineers with beautiful design characteristics. None of that is about having lunch at Spago's.
Meanwhile, Jeff Bezos is ripped.
Yes.
Yeah.
He's got a trainer coming every day.
Does he? Is that how he does it?
I mean, I don't know. He looks like he does.
So, Laura, talk to us about Meta. You have been kind of underperform on the stock. It's just been ripping. What do you think's going on there with the stock?
Zuckerberg's in good shape, too.
Yeah, he is. So what do you think's happening over at Meta, and maybe what the street might be missing, or maybe what you're seeing?
Yeah, so I think near term he cut a lot of people. Last year he cut 25% of his labor force, which, as you know, Paul, destroys morale for an enterprise. So he cut 25% of his people, and he had anniversaried the negative comps. Remember, he said when iOS changed its privacy policy, when Apple changed its privacy policy, he was going to lose $10 billion in revenue. He did that for a year. So his revenue went negative for a year. So he's back to positive revenue growth and acceleratingly positive revenue growth. And he has 25% fewer employees. So right now that stock's on a tear this year because of those fundamentals in the near term. Our sell is predicated on three things. One, he doesn't control his content or his distribution. His content is user-generated content, and they're moving to TikTok. And they're taking their clients to TikTok. And the ad revenue is following them to TikTok. So the competitive situation in his core business is really bad. And the regulators are late, so they think he's a monopolist. So they're going after him for his market position 3 years ago. So he has regulatory headaches that cost a fortune and distract the whole enterprise. So he's got regulatory hassles of being a monopolist when really TikTok is chipping away at his base. And then the metaverse spending is coming back next year. And now he has a whole new spending category, which is called generative AI, which should be a huge revenue generator, except he's giving away his large language model. He's not charging for it. So here's another big cost like center called generative AI. And he's making everything he does there, he's giving away in an open large language model. So, none of this is good fundamental outlook, even though this year I'm getting really killed. My rating's wrong this year.
All right. So what are you really spending your time on these days? Is it Apple? Where do you think your clients should be thinking about it for the next 1 to 2 years? Because boy, you take a look at some of the traditional media companies that you and I grew up with. That's a tough call right now.
Yeah, unfortunately, I think all these media companies have become too small. I mean, when you have somebody like Apple generating $90 billion a year and Google, meaning Alphabet, generating $60 billion a year of free cash flow, that's like bigger than the market cap of like a bunch of these companies combined. So I think the answer is the old media companies need to merge into these global distribution juggernauts. They need to get bought by them. The problem is, Washington, D.C., with Democrats at the head of every agency, it's very tough to get acquisitions done. So what these media companies need to be doing is shrinking, meaning laying off people, increasing their dividend, and they've become value plays. They are no longer growth businesses.
Is there a shakeout here? Is there still maybe consolidation of media company A, media company B getting together? Last gasp?
Yeah, I mean, I think there's a widely, almost a consensus rumor in a sense that Paramount's too small, needs to get bought. It owns CBS, so it cannot be bought by NBC, which is Comcast. It cannot be bought by ABC, which is the Walt Disney Company. So, and it can't be bought by Fox, which owns Fox. So really, David Zaslav or, I guess like Amazon could buy it or something. But I think there's sort of a consensus that probably Warner Brothers Discovery buys Paramount because it doesn't own a broadcaster already.
Right. All right, Laura, thanks so much for taking the time. Always appreciate getting some of your time. Laura Martin, she's Managing Director, Senior Media and Internet Analyst at Needham & Company. She's been based out on the West Coast her entire career, so she's kind of right in the backyard of kind of what's happening out there in the world.
Thanks for listening to the Bloomberg Markets Podcast. You can subscribe and listen to interviews at Apple Podcasts or whatever podcast platform you prefer. I'm Matt Miller. I'm on Twitter at MattMiller1973.
And I'm Paul Sweeney. I'm on Twitter at PT Sweeney. Before the podcast, you can always catch us worldwide at Bloomberg Radio.